Hi everyone, welcome to our latest YouTube video. We're going to talk to you about how to use Elliott Wave and Fibonacci tools within your favorite charting package to model out how things like the QQQ ETF might look over the next year or so. Now, Elliott Waves and Fibonacci methods are often presented as very complex and confusing, and certainly the math at the heart of the Fibonacci method is complicated. However, applying these rules and pattern recognition techniques to stocks and ETFs is straightforward, and with little practice it's something that anyone can do. So first of all, take a moment to read our standard disclaimer, which is on your screen now, and we will then walk you through how to project out the QQQ. Okay, so moving on. This is the QQQ ETF, which, as you know, is the proxy ETF for the Nasdaq 100 index. And this is a weekly chart going back 4 years, and we like to use the Trend Spider chart package. We have a link at the end that you can use to learn more about Trend Spider if you want to sign up with a discounted rate. Okay, so let's try and overlay an Elliott Wave and Fibonacci pattern on this. The most important thing is to start to find a wave 1 and a wave 2. And if you can define those, that sets the pattern for the rest of the cycle that you're trying to measure. A method we like to use is to try to find something on the lines of a 78.6% retracement. In other words, a 78.6 drop on a prior move up. And these crop up surprisingly commonly. If we measure from here, which is the 2018 lows, up to the pre-COVID highs, then you can see that that is an almost precise 78.6% retrace from Q4 18 here, which was the last time the Fed tried to normalize monetary policy, up to the pre-COVID high, down to the COVID trough, 78.6 retracement of that wave 1 there. We'll overlay the wave numbers in a moment. After the wave 1 and the wave 2, we then see a wave 3, and just to check that that is a wave 3, we use this three-pointed Fibonacci tool from the bottom of the last wave 2 from the bottom of that wave 1 to the wave 1 high to the wave 2 low, and we can see that that wave 3 peaked at a really important Fibonacci level, 2.618 extension of the wave 1. So right here we can say, well, we have a 1 up, a 2 down, a 3 up, and we can also see that this reset during 2022, this big sell-off for the first half of the year, that looks like a wave 4. Let's measure it. So from the bottom of the wave 3 to the top of the wave 3, yeah, and you can see that this wave 4 bottoms almost the 0.618 retrace. That's quite a deep wave 4, particularly after a 78.6% wave 2 retrace. Very often if you get a deep wave 2, you get a shallow wave 4, but this is pretty deep wave 4. Now, although everyone thinks it's the end of the world right now, in fact, so far that June low was the low. And as we'll see in a moment when we zoom in, the market, the Nasdaq 100, the QQQ ETF version, has moved up off those lows and is looking like it's going to make a run for a new high. Let's just overlay the wave count on here. So we have a wave 1 right there, a 2, a 3, a 4, and if this next move up is correct, and this is a wave 5, then we should see a new high made in the QQQ within the next few months, maybe year, and that should peak at least a touch above that wave 3 high, so at least 412, 413, and technically could go much higher, but let's say it could reach 412 fairly easily. And so here what we've done is taken some potentially complicated things, but using Trend Spider, draw them out very simply. So we have a wave 1 up and a 2 down. We can be confident that's a 1 up and a 2 down because we've got a 78.6% retrace here. That's a defining characteristic of a wave 2. We have a wave 3 up here, and we know that's a wave 3 because a 2.618 extension is it's a very bullish extension. More commonly, you'll find a wave 3 will terminate around the 1.618 extension. That is a common wave 3 stretch, and you know that's not a 5 there because there isn't enough of a sell-off anyway up through this wave 3. We then get a wave 4 here, and again we can be confident that is a wave 4 because it's fallen the right amount. So anything between the 236 and the 618, even in some circumstances the 78.6% drop would be a wave 4. And so far we look like we're in a wave 5 up because we're up above the June lows. So that's looking on the weekly. Let's just zoom in and see what's been happening since the June low. So I'm going to remove all our markups here, and we're going to focus just on that zoomed in pattern since the June lows. So we take all this off. Okay, so let's switch to the daily. There we go. Okay, so this right here is June 16, that's where the low is in. Now, if Elliott waves are, if not quite fractal in nature, then certainly they operate simultaneously at larger and smaller time frames. And we'll talk about why that is another time. But what you have here off the June lows so far is a pretty interesting pattern. This is what's happened. From that June 16 low, you have a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up. And we can say that we can get rid of the questions here because that was a wave 5. So we have a full 5 waves up off of the lows, which is a bullish sign. And we then have that 5 waves forming at the slightly larger degree. Oh, that's a wave 1 up. And we then have a retracement back in this smaller degree. And let's just measure that from the June lows. And you can see that, look, that troughed quite amazingly at almost exactly the 78.6 retrace of this June low to August high. Now today, as you know, was September Q3 options expiry day. That's a big tumultuous day in the markets where anything can happen. But what actually happened was the QQQ put in an almost perfect wave 2 retrace of the wave 1 up. Remember, 1, 2, 3, 4, 5 comprises a single larger degree wave 1 of the wave 1 up off the June lows. So what this means is the QQQ could be setting up for a wave 3 up. And we know where wave 3s can go to. They can go to at least the top of wave 1 and very often 100% extension of wave 1 and very often more than that. So if what we see here is, I'm just going to remove this right here and just plot this out in this larger degree now. So we've had a 1 up, a 2 down, and what we could now see is a 3 up that should peak at least 334, 335 above that wave 1 high, maybe at the 350 level, which will be the 100% extension of that wave 1, and there's no reason why, in fact, it couldn't reach as high as 389, which would be the 1.618 extension of that wave 1. Now, that seems pretty crazy when you say it. Right now, you know, it's been a pretty tough September, but this is setting up as a very neat technical pattern for a moving QQQ to the upside. Now, of course, that doesn't mean we're going to find new highs in the Qs automatically anytime soon, but what it does mean is if you just step back and look at this pattern, then what we have is evidence that we have a 1 up, 2 down, 3 up, 4 down, 5 up. And this movement up off the June lows, retrace into the August and September lows, and finding support at the 78.6% retrace of the move off of the June lows that is confirming evidence so far of a bull run in the QQQ. So we'll see what happens. But for now, our house view is bullish on the NASDAQ, and we hope that we've been able to demonstrate that with little practice, anyone can use these Elliott Wave and Fibonacci tools. We use TrendSpider a great deal in our work, and you'll find in the comments field below this video a link where you can go and learn all about TrendSpider, and you can sign up with a discounted rate if you choose to. We have an affiliate relationship with TrendSpider, so if you sign up for a discounted rate, we get a referral fee, but the benefit to you is that discounted rate. Thanks for watching our stuff. Hope you've enjoyed it. Subscribe to our YouTube channel for more like this, and we'll talk to you very soon.